with a syndication, it's a little tricky though.
Hmm.
So most of the time with a syndication, you have to have all the investors on board because you 1031 the total gains.
Got you.
So it's a little harder. However, with a JV, which is those under $3 million, you can 1031 until until you die.
Thursday again, everyone, and this is Chris G here, back with another episode of Hard Hat the CEO. Today, we're going to talk about some of the stuff I just love to talk about, and you've heard me talk about it before. I got a new guy to talk to it about with. That's Ryan Twomey. Ryan, we're going to talk about real estate and passive income and all that good stuff that goes along with it. So, everybody, let's welcome Ryan. Ryan, how you doing today?
Good. How you doing, Chris? Thanks for having me on.
I'll tell you what, I'm stoked, but I'll try to hold my enthusiasm for later when we get talking about passive income. But can you tell us a little about yourself, Ryan?
Yeah, definitely. So my name is Ryan Twomey. I'm the co-founder of TR Capital Partners. I started my career in financial services, doing some wealth planning, insurance for different types of investors before transitioning to an analyst role, pretty much crunching numbers for the parent company of the New York Stock Exchange. And those jobs paid well. It was a typical W-2 route: go to school, get a job, save for retirement for a 401k. But it took up a lot of my time. So with the goal of working for myself and having complete control over my schedule and leveling up my finances, I began investing in real estate and scaling to have that income pay for my properties, pay for my monthly expenses. That was the goal, at least. But what happened was I ran into some of the landlord headaches that we've all heard about and got burned by some tenants. So it was not as easy as I thought it would be. However, since then, I've been able to start my own company, TR Capital Partners, through those learning lessons. Was able to quit my corporate job, and we built a community of investors, mostly sales executives and business owners, who have partnered with us to acquire 574 units that pay us every month, with a larger goal of adding another 1,000 units to that portfolio over the next 3 to 5 years or so.
Awesome. Got a couple different questions here. Why real estate? I talk a lot about taking your money as a business owner, investing in other things. I mentioned earlier, I like money trees and I want to orchard the money trees for myself and my friends. Why real estate?
Well, initially, I started investing in real estate or studying real estate because when I was doing my wealth planning and insurance job, I was dealing with a lot of high net worth people. And obviously, I was staring at their portfolios and kind of learning their lifestyles. And what I noticed was all of them had a large allocation of their assets into real estate. And it wasn't just for the passive income. Obviously, you have the wealth growth part of it, but a lot of it was for the tax benefits. So people can keep more of what they earn and then put that to work and kind of double dip in that sense. So I refer to it as phantom income. And then when I started getting into real estate a little bit more, I think a common thing that's among a lot of real estate investors is I started looking into Robert Kiyosaki, Rich Dad Poor Dad. So that's kind of what moved the needle for me to pull the trigger on my first property, which was a triplex. And from there, it's been a wild ride scaling up. But that was my initial interest.
That is the book that started me off. That is, I knew we are going to have some good times today. So, what do you mean by phantom income and tax benefits? I happen to have an idea what you're going to tell me, but let's let the listeners hear.
Yeah. So phantom income, I guess you can refer to that as income that isn't directly hitting your bank account. It's like obviously when we have real estate, right? We have the passive income from rents, the property itself that's producing. So we're seeing that come into our account. Phantom income is behind the scenes. So, depreciation, other tax benefits, depending on the scale of your properties and things like that, like cost segregation. It's actually probably a larger chunk of money that you're seeing just on either the back end or if you roll the gains into another property. So it's pretty much sticking it to Uncle Sam is the way I refer to it. Paying less in taxes. It's the biggest lifetime expense that all of us have, but it's also the most mismanaged, in my opinion. So by having different businesses and real estate in general, a lot of people are able to offset those based on the different tax codes and things like that and use that as a playbook to avoid taxes. So that's kind of what I mean by phantom income. It's not directly hitting your bank account now, but it's really growing your wealth in a significant way if you use it correctly.
Now, I want everybody to understand you're not sticking it to Uncle Sam. And what I mean that is it's legal.
Yes.
And I also mean that all these big boys that you see out there making all the money in the world, they use these tactics. Our president Donald Trump, he got all his millions and billions, whatever it is, through real estate primarily, and then he had extra money to spend on other projects and so forth. But real estate's his base, And he said it in a debate with Hillary Clinton. I use the same rules. We're using all the same rules. Nothing's illegal, but and there's in a way, government wants you to focus on real estate or government or real estate for lots of different reasons. It helps people have homes and supports people and investment in the community and so forth. That they don't have to invest dollars in or tax dollars in as well. They rather spend it on mice over in some country or something. But anyway, that being said, I won't go into that. But
Yeah, so the tax code, I mean, just to kind of
go
touch
ahead.
on that one more time, like, so
Yes, keep touching.
the tax code is, a lot of people think it's out to get them. Obviously, no one likes paying taxes. Really, though, it's just that the government is incentivizing you to behave specific ways. It's usually based off of a need that they themselves can't produce. So, for example, affordable housing, huge one.
Hmm.
Entrepreneurship and business owners, depending on your industry, another big one. So it's really just a playbook on how to avoid taxes, but the goal of it is to produce economic activity and really just shape your behavior. So it's really just incentive based stuff that the government hands you. It just depends on if you know it exists or how to use it.
And on that same note, anything you invest, that dollar generates itself 7 times usually in the community, and that's really good for the economics of your hometown and like my little small town, or even a big town like you're in Worcester. So, but you're nationwide, technically, I'm assuming, with your investments. Would that be correct?
So we're currently in 3 markets. We have an RV resort in Louisiana. We have some smaller multifamily, about 24 units in Minnesota, and
Hmm.
then 115 units in Massachusetts. So our primary focus is Massachusetts. However, we've developed relationships with different operators around the country. So, some deals come our way from all over the place, but primarily we're focused on our own backyard for now.
Sure, there's nothing wrong with that. So, I was looking at my notes here, and we talk about you're more of a syndicate type of thing versus house. So you mentioned you don't have the landlord issues that you would that I have horror stories about and just enjoy tell them sometimes. How does that make it different than say just going out and buying some investment real estate and being your own landlord?
Yeah, so I went through the horror stories too, and that's kind of why I pivoted to being a syndicate. So I
Hmm.
started to go bigger because I wanted to hire someone to deal with the tenants for me. However, I didn't have the capital initially to go and buy a $10 million property, for example.
Right.
So when you're getting, when everyone's thinking about real estate, they typically go immediately towards the landlord route, the traditional route, mostly just because that's all they know, in my opinion. At least
Hmm.
that's how it was for me. So the syndication route is a little different. It allows people that want to get the benefits of real estate to invest in assets at scale without the hassles of being a landlord. And what I mean by that is there's 2 main parties when it comes to real estate syndication. My team acts as the general partners. We do everything from source the deal, find the financing, have the SEC attorneys, manage the property, business plan, the whole entire thing. Dealing with tenants is part of that, although we hire a property manager. And
Hmm.
then the limited partners are the people that want to passively invest in those deals. So we have equity partners come in and trust us to operate these properties. And that way they can still get the passive income, the tax benefits, the equity growth that they would have in these apartments, but they wouldn't have to do it themselves. So a lot of times it's because people are looking to generate other streams of wealth. They don't have the time or the desire to manage properties and tenants, and or they just, a lot of it is the tax breaks that we've already talked about, right? Business owners and sales executives tend to have higher incomes, and this is a great way to keep more money in your pocket, essentially.
Now, my listeners, as business owners, construction contractors, and so forth, any equipment they buy, they get to depreciate out. And the same way with real estate, you get to appreciate that. As a syndicate, as a proportion of, assume the money you put in to be a group member, do they get a portion of that depreciation as well?
That's right. So it's based off of the amount you put in compared to the total acquisition cost. So for round numbers, if it's $1
Sure.
million in acquisition and you put in $100,000 investment, you'll have 10% ownership in that property. So all of this, it all trickles down. The passive income,
Hmm.
you'll get 10% of that. Equity, 10%. Essentially, you are a true partner, a true part owner in the property. You're just not the one making the day-to-day decisions, is what it comes down to.
Sure. Cool. If that's something you guys want to do, I recommend obviously contact your accountant, contact the lawyers and all stuff, because as a I'm sure you could have individuals join your group, Do you have a lot of individuals? Do you have other entities like LLCs or something like that do it as well?
So there's a variety. It's both. The short answer. We have
Hmm.
people that join and they invest as their individuals. They have some people invest with their businesses. Some people are, they have trusts or old 401ks. Family offices invest alongside us as well. There's a lot of different types of people.
Hmm.
However, anyone technically can invest in them, assuming that they're sophisticated enough to really understand what they're getting into. So I always tell people it's not for everyone. It does take a specific person with certain investment goals. And that's why I do say, like you just mentioned, contact your accountant, your financial advisor if you have one. Really sit down and plan this thing out and make sure it aligns with whatever goals you're looking to achieve with your financial life before actually just diving into a deal.
I want to change gears a little bit and talk about you and your business as far as how you run your business. In my notes here, I've got a orientated mindset. Can you explain that to me and my listeners?
Yes. So I think with business owners in general, right? We all have somewhat of an abundance mindset, right? So we're always looking. The reason we even own our own business is because we don't want to be limited to a W-2 job or someone else's schedule, right? So a lot of times we're teaching ourselves things all the time to either expand our business, become more efficient, optimize our lifestyles, things like that. So the mindset part of it for me was 90% of just taking action in the first place. Right. So not only with my business, but everything else with the habits throughout my entire life, I try to make sure I'm living up to the standard that I want to portray in my business and to others and kind of set that standard for my brothers, my family, things like that. So there's a lot of things behind the scenes as far as my day to day goes that I look to try to do to make sure I am living up to that standard. But having a growth mindset and not limiting yourself in your belief is a big part of starting any business and especially growing it to something big and prosperous and fruitful for yourself as well, in my opinion.
I had a question. This happens to me because I get excited and I start thinking about other things. The How do you go about finding your prospects of, say, investments?
So, do you mean the investors or the actual deals themselves?
Well, let's talk about both. Let's talk about the investors first. How you group those people. Um, I'd like to hear that. Because,
Yes.
well, let me give you an example. I go to the hotel sometimes, and next time you're in a hotel, everybody, you walk in, you look in, there's going to be a plaque on the wall usually, and it'll say owned by such and such. And sometimes those are groups. So I'm wondering if those groups are like the syndicate.
They
As
kind of
far as,
are. Yes.
yeah.
So they would be what's my team does, the GPs, right? So we are the
Hmm.
ownership group. Typically, it's an entity that will own the property itself, which we open a new LLC for every deal.
Mm,
But the
yep.
people, the money side, is mostly those limited partners. Now, the GPs, which is my team, will invest in every deal also, but the larger amount of equity comes from those equity partners that want to get those benefits I talked about, and they rely on us to manage it. So when you do see those plaques, it runs in a similar way. Now, if you're a Marriott or something like that, I'm sure they have their own capital to buy all those properties and stuff. But for those smaller boutique hotels, I know a lot of people do syndicate those. So you might drive down the street and see this large apartment complex or this big new hotel and think that some rich guy or a bank or some big brand owns it when in reality it's probably people just like you and me that partnered together as a group investment. And
Hmm.
then there's one of them in that group or one entity within that group that actually runs the deal itself and passes those returns down in the form of income and equity and the tax benefits to those limited partners invested in the deal. So that's typically how a lot of those are run, which I wasn't aware of until I actually got into this business itself. Because, like I said before, just the lack of knowledge of knowing that you can invest in those types of buildings at scale without having 100% of your own equity was a brand new concept to me. But thankful I found it.
How do you find those type of properties too that are worthy of investment?
So we have very strong relationships in all the markets we invest in. Most of the time, when you're going to the commercial assets, which technically is anything over 5 units for the real estate for the apartment space, you're not going to find very good deals that are open to the public. Most of them come from broker relationships, seller relationships, and we call them pocket listings, which are just off-market deals that get directly sent to us, and then they'll go out to the public if us or the other investors on that broker's list just simply don't want it. So a lot of times, if you're looking at properties that are, say, 100 units online or through a public listing, I don't want to sound derogatory, but we call them kind of the trash can listings of the commercial
Yeah.
real estate space, because when you're doing it at scale, which is a lot different from the residential space because it's all, on Zillow and things like that. It's just not the case when it comes to these larger deals.
I'll share a little something with you guys. And I learned this years ago. When it comes to like hotels or large properties, and you look at money and you think, well, how can I afford? Well, maybe you can't, but as a group you can, one.
Mhm.
And two, if you do the math, you got to have so much cash down to make it the price is, let's say it's a fair price, but you have the money to put down toward it and you get your return on investment. That's really what you're calculating, how much return you get on your investment. Would that be a fair statement, Ryan?
Yes. So a lot of it is based off of, we have our own underwriting model, but we're typically targeting things 16 to 20% IRR over a life of a hold, which could be 5 or 7 years.
Hmm.
But a big driver is obviously, what do we think we can get based off our business plan and acquisition price, things like that.
I had an opportunity, it was probably about 30 years ago. Somebody called me and said, hey, do you want to buy this car wash? And my dad was a banker and we were doing the math, and you couldn't make that thing cash flow with a loan. And all dawn, I go, well, how are these people doing this? Because I know a lot of people that, have either car washes or hotels or whatever it was, they'd pay cash for it. If you had the cash and you put it in that type of entity that makes sense, the money just starts, it's it's like a savings account with a return. And you're putting that in there plus some other benefits on the tax side and stuff like you talked about. That's kind of what we're doing here, is that we're putting money in with something like you guys. You go out and you might pay cash for it, or you might put enough down that the rest of it makes sense with the loan, or however all that works. But the point being is you can do it too, and you can with a smaller amount by joining groups like yours. So
Exactly. Yep. And we typically do leverage all of our stuff. So we have a loan or a mortgage on most of
mhm,
them, but sometimes people do pay in cash, and it's just a different type of game plan, really. There's
yeah.
different strategies you can use, but again, it's people coming together as a group, investing in something at scale, which provides a lot more return as far as the actual cash flow amount that you're getting every year.
And if you're getting a loan, you're obviously paying down enough of it to make the loan payment make sense on the
Mhm.
to get a whole cash flow deal. How many units did you have before you realized you wanted to do a syndicate?
We had 5 at the time.
Hmm.
So we were relatively small. We were about 2.5 years in at that point. I have one other partner, well, multiple now, but at the time I had one other partner, and we really just got started getting burned pretty bad with those landlord horror stories. You probably experienced them as well,
I
unfortunately,
still
going
have
to
them
court,
today.
going through the
I have
eviction.
property managers, yes, but yeah,
Yeah.
I hear them. Like, okay, well, that's why I don't take those phone calls anymore. That's why I got you.
Mhm.
So,
And that's the reason I think a lot of people don't invest in real estate in the first place. So thankfully, we found the syndication route, so we can provide them the benefits without having to deal with that stuff. But it definitely took a while for us to really establish a game plan, build our teams out, and we had a mentor that helped us quite a bit, thankfully.
mhm.
But I'm just happy we made the leap. So again, we can get higher returns, and I also don't have to deal with going to court for a tenant that didn't want to pay.
There you go. So you're in Massachusetts and I'm in Missouri. Obviously, say I wanted to invest or become part of your group, and I passed all the jumps and the hoops and stuff. Being out of state, is that a problem for an investor
Nope,
to buy
no,
property?
it's not a problem. So the thing is, we have to have a prior relationship for most of the deals that we're doing before you could deploy capital into a deal. And the easiest way to do that is really just joining our investor club. I want to hop on a Zoom, make sure it's even a good fit for in the first place, and you understand exactly what it is. And
Hmm.
then from there, we just want to keep building that relationship. So when a deal does come across our desk, it's something we can present as an opportunity. And not every deal fits everyone's goals. Some deals are higher cash flow in the beginning, some are equity plays. There's some they're all completely different. So we try to source deals based off of our investor network and our investor community, and just continue to educate people. So but we always want to have a relationship with people that are investing alongside us. A lot of times we're on a texting basis. If you're in the area, we'd like to go get dinner, coffee, drinks, lunch, whatever. But the first step would just be to reach out to us and hop on a call and see if it's even a good fit in the first place.
Kind of some of these pocket listings,
Mhm.
and for those who don't know what a pocket listing is, we kind of brief over it quickly, but basically it's a it's not insider trade by no means, but basically it's when a realtor finds out that somebody has something for sale, and since they have a buyer that they have worked with in the past and they trust, they'll contact that person first prior before making it known to other people that it's available, so that the good friend here, like Ryan, can make an offer and maybe get it tied up and under contract before others find out. So sometimes those deals are pretty gotta go pretty fast. And so do you have a team that goes out and looks that stuff up and then kind of does the paperwork, and how's that all go down?
Yes. So we have four or three main roles on our team. I focus on investor relations and talking to investors. That's really what I do mostly for my day to day. I also have an acquisitions guy who does the deal sourcing, a lot of the underwriting. When he does underwrite a deal and the numbers check out and things like that, also has relationships with those people that provide the pocket listings, which helps. We go over it as a team, and then from there we decide if we're going to submit an offer or not, get it under contract.
Sure.
Usually the benefit of that is, well, first of all, he's been doing it for 20 something years. He has relationships all over the place. He's also from Massachusetts, so we can get stuff in our own backyard pretty easily. But usually when those pocket listings are sent out initially, it's to one or two groups, maybe three groups. And
Right.
you're pretty much competing with them instead of competing with the masses. Now, if it goes out to the public because no one wants it, then it either means we didn't want it, the timing wasn't right, but now either way, you're competing with,
It also
hundreds.
means the other two didn't want it either. And so
Exactly.
there's something's just not quite right about it. Now that could be a good thing to some people because A, they don't know what they're doing or looking at. And if it sits on the market long enough, then sometimes you can make a counter offer and get it cheaper than what you originally thought you could. And that's a play, and that's a whole other subject to how to play that game. Is this what you do all the time now? You don't have any other side hustles. This is what Ryan does.
So, yes, I actually quit my job last year, to do this full time. So I was able to scale
Congratulations.
up to do that. Thank you. It was an
Yeah.
awesome feeling. And recently my partner and I actually opened up another business about a month ago, which we're going to use to supplement our real estate business. And it's a cleaning company. So we've hired some cleaners. We're going to go clean our own units and then also do
Yeah.
some residential stuff across the state also. So it's allowed me to not only scale up my portfolio to go full time in the business, but also to open up other ventures that just simply play off of each other. And
Mhm.
essentially, the goal is to become vertically integrated from the top to bottom, from property management to cleaning, maintenance, all of those things. That way, we keep it all in house. We have some people on our team that already own property management companies, which we use, which is cool. But our next step would be to make this thing even bigger to where we have our own in place. But things are moving pretty quickly, so it's just a matter of how we allocate our time and resources at this point to most benefit the investors. We definitely don't want things to fall through the cracks just because we're looking to take on something new.
Is there a project too small that you wouldn't invest in?
Um,
I mean, single family homes, I assume, is something you're not interested in. I guess I'm talking about volume, maybe. Like, are you looking for, well, if it's only 200,000, I don't want it. I'm looking for a million or better type investments.
Yeah, typically we want 10 units and up. So we kind of have two business models right now. And this all depends on the types of people that want to invest alongside us. Anything under $3 million purchase price, we
Hmm.
will typically do a joint venture. So we'll have one equity partner come in. They'll be the whole entire capital stack as far as the acquisition cost goes, so the down payment and some reserves. And then we will operate on their behalf. Now they still play somewhat of an active role, but that's for smaller deals under 3 million. Anything over 3 million, we will syndicate. And that means there'll be multiple equity partners in that deal. Anywhere from we've seen 5 up to 30 in a single deal. Depends on the size of the property. But those ones are typically, 5, 6, 7, even 10 to $12 million deals that we're doing. So we're having to raise about a third of that in equity to actually close on the property.
I don't want to say it's like GoFundMe because it's not. But is there a, let's say that I got a guy over here, he has $100,000, and I got a guy here who has 25,000. Are you going to take the guy that got 25? or is that too small of an investment for you guys? You want the 100,000 only and above? How much cash does someone have to make it worth your while for be a partner?
So we have done 25,000 in the past, but typically we want to stay $50,000 and above. And the
Okay.
reason for that is because the SEC, they're involved in all of our deals,
Oh
and there's a
Lord.
minimum of or a maximum, sorry, of non-accredited investors that can be involved. And non-accredited just means someone who makes under $200,000 a year or has $1 million or less than $1 million in net worth,
Hmm.
excluding their primary residence. So someone who's just not at that level yet. We can only have 35 of them in a deal. So you figure 25,000 times 35
It's too
may
many.
not get the deal done for us, right?
I
So
got
we
you.
typically want to have larger checks, but 50,000 will be the minimum, I think, from here on out. The larger the deal, the larger the minimum.
But summarize what Ryan just said about the SEC. They don't think you're smart enough to invest your money, nor do they want you to lose your investment. So you have to be basically accredited. Meaning you have to have experience investing or made a certain amount of money in this case 200,000 to be worthy to invest in a syndicate program type thing. And that's the same way with stocks and bonds and all that good stuff too. If you're going to want to be an investor directly, you got to be accredited in a certain amount of level. So
Yeah, it's pretty much a way for them to protect unsophisticated investors. But I like the way you put it together. They think you're too dumb to invest your own money. It's kind of
well,
what kind of a
it's a free
simple way to put
country. I want to lose my 25,000. My God,
it.
let me lose it. But anyway, that's winging on that subject, a whole different subject anyway. So I went down this path, and let's say I got my 100,000 or whatever it is, and or my 50, my minimum, and I say, "Well, Ryan, I'm already part of your group. You like Chris, you like my listeners, and okay, you got the money. We like you, and we're going to send you something. So what do you send me so I can look at to say, well, I want to do this or I don't want to do this?
So we have a pretty, step by step process that we follow for every time we have a deal. So we actually have one right now. So for example,
Hmm.
to bring you start to finish, we submit the offer on our side. Once we get under contract, we spend about 30 to 60 days in due diligence. And that just means we pretty much turn the property upside down. You walk every unit, we go over all the financials, make sure nothing was missed. And that way we know exactly what we're getting into, or we can, retrade, which means renegotiate the offer if something was, changed in the property.
Counter offer after you've done and basically a inspection.
Exactly.
Like we do on homes. If you're buying a house, you got an inspection. That's what Ryan's doing, going out inspecting and make sure nobody's fibbed to us about what's going on. That way, Ryan has a nice, warm, fuzzy feeling about buying it.
Exactly, because at first we want to protect the capital, then obviously grow it
Yeah.
goal. So from there, let's say due diligence goes well, and then we'll get investor information as far as like investor decks. We'll host a webinar. We'll send out underwriting. We give you access to literally everything that we have access to, and we present that over about a 30 to 45-minute webinar that's live. For those who can't make it, we'll send a recording out so you can get the information along with different market reports and any information you might need to educate yourself on the specific investment. If you want to move forward, we have an investor portal, which is kind of like an E-Trade account, but it's for these types of investments. And
Mm-hmm.
it has all the information on the deal there, as far as all the details, the legal stuff, the financials, everything you need to know. And if you wanted to move forward, you would just have to sign some private placement memorandums and operating agreements, things like that, that are for the SEC and the lawyers to take care of. That's not to say don't read through them. Definitely do
No,
that.
no. But
But that's how
yeah,
you kind of get your investment. From there, you wire the funds into the LLC's account, and we will go through and acquire the property and start operating on your behalf. From there, we send out monthly updates on what we call our KPIs, whether that's the rental collections, occupancy rates, the business plan, whatever's going on with the property, and we keep you up to date. Then from there, we'll typically send out a passive income check every quarter with a sale in either 3, 5, or 7 years to hopefully 2 to 2.5x your equity, which is our ultimate goal.
I see here that you currently, I think the way it's worded, you're averaging 18% IRR, correct?
Correct. Yep.
I know that sometimes when you talk about investments, there's laws about what you can say and what you can't say about making return. Can you tell us in that Zoom meeting, for example, based on our calculations of here's the income, here's all the other expenses. I used to do a cash flow report when I buy a property, and I looked at my cash on cash return. Are you able to say that based on if everything goes the way we plan, this should have a return of, or is that allowed with the SEC involved?
It is allowed. So that's actually one of the main things we touch on. So we people want to know what they're going to make. So
Hell
we
yeah.
are allowed to say that. So we typically will outline exactly what the returns look like on a year by year basis per the deal, but we also have information to back up how we expect to get there. So it's not some pie in the sky thing. That's part of what we outline though. So that's the overall outcome. And then we break down the process on how we're going to get there on a year by year basis. So we are allowed to say that. We just can't really solicit a deal or new investors that way, depending on how the SEC structures it. So there are some things we can and can't talk about depending on the deal structure itself.
And you mentioned a couple times selling, say 7 years down the road. Now, the beauty of real estate, and one of them is that we hope to have some appreciation over that time. Plus, we hope to, so we're going to sell it from what we bought it for. We've had some depreciation that we've collected on our taxes, and the old government wants that back if you make a profit. Are you allowed to take those sales and put in a 1031 exchange? And for those who don't know what that means, is where you can take profits from a sale and put it into like assets and avoid paying taxes on it as long as you reinvest in it. So my question is, can I do a syndicate and you all sell one? Can I say, Ryan, let's go find another one because I need to avoid taxes. I want to put it back into your company to buy another property.
So you can with a syndication, it's a little tricky though.
Hmm.
So most of the time with a syndication, you have to have all the investors on board because you 1031 the total gains.
Got you.
So it's a little harder. However, with a JV, which is those under $3 million, you can 1031 until you die at that point, right? To avoid the
There
taxes.
you go.
Which is pretty much the goal for myself is on my smaller stuff. I'm just going to keep 1031 in them to increase the cash flow and hopefully never have to pay, any of those capital gains tax. And then from there, you can refinance out some of your equity and put that into new deals or new investments. But either way, it's not a taxable event, which is a pretty cool thing about real estate.
I agree. I totally agree. I am running out of, you have made my mind just, I kind of asked the question, but I didn't get the answer. You answered it, but not the way I guess I need to answer it differently. From the time you get a listing and you guys think it's a good thing, when do you start collecting or looking for investors? After due diligence or right when you get going and then say, hey, well, for example, um, if I give my 50,000 to you, yeah, I want this, and you do your due diligence over 60 days and you come back and say, Chris, we decided this is not a good thing. You get the 50,000 back, I assume, or do you hold it for another property? I said, well, can I tell you, just hold on to it. Let's go find us another property.
Yeah, so we won't take any funds until after due diligence.
Okay.
And it's exactly for the reason you're stating. Like if we find something, granted you're not losing money, but we don't want to just have to wire you back 50,000. And we don't want to hold it for another property because it might be a deal that has different returns that maybe you're expecting, or maybe a deal that you don't like based off of location or the property type. There's a lot of things that go into it. So we do operate on a deal by deal basis, so you know exactly what you're getting into. But we don't start having investors wire funds and things like that until after due diligence. And we'll have a webinar on the property, or tease it to our investor list, letting you know we have something in the works at this moment, like currently right
Right.
now. But I'm not going to ask you to wire funds until we know
Right.
everything is squared away and solidified.
Now, these are obviously large investments, large purchases. And when I do say, even some of the multifamily projects I've purchased in the past, you got 40, 30 to 60 days to close. But it sounds like these much larger projects take, so what's an average length of time that 60 days for, I guess, for due diligence, but what's the contract length usually last or expectation?
So it depends on the deal. It could be 45 days. It could be 60 days. It could be right after due diligence. So the thing with due diligence is we have the ability with these commercial deals to extend it another 30 days. So we can pay a little extra to actually file an extension. Now, most of the time that's needed if it's, a 300 unit building, or maybe we
Yeah.
found something that we wanted to get more clarification on, or there's a lot of reasons why we might extend. However, you can still typically expect, 30 to 60 day until close. And by then we would need to have those acquisitions and the equity checks as far as from the investors wired to the account to go to the bank and end up executing the acquisition.
Do you ever see yourself doing new construction as far as building developments and so forth?
So I haven't done those as a GP, like as in my firm hasn't. However,
Mhm.
I've invested capital into someone else's build to rent. So I like the concept. I just don't have the experience yet to do that. Plus, in Massachusetts, there's not a lot of room to build, so maybe that's why I haven't
I've
gotten
been
into it.
there a couple
Yeah,
times and no, there ain't.
no, it's
Y'all have
very tight.
nothing. It's the
So I mean,
walking city, right? Because y'all got to walk. Well, Boston is. I'm not sure about Worcester, but there's not much room anywhere.
it's pretty much all the same. So Worcester, Boston, Springfield are the three major cities, and they're all
Yeah.
super tight knit. There's not a lot of undeveloped land, so you'd have to pretty much knock a building down to put one up. So.
Yeah. If any of my listeners wanted to reach out and say, Ryan, I'm interested in something you offer, how would they get hold of you?
So you can reach me personally on LinkedIn. It's kind of where I hang out the most. Just search
Mhm.
Ryan Toomey Real Estate. I think I'm like the only one on there. Also, to learn about more of the opportunities I've mentioned today or how we operate, you can go to our website where we have a ton of educational resources, including a free ebook, past webinars, and then just everything around being a successful apartment investor from the passive side. I will say again, this type of investing is not for everyone. It does take a specific person with certain investment goals, but you can also join our investor club to see if it is a good fit and schedule a quick 15, 20-minute call with myself or someone else on my team and go from there. But if it's not with us, we probably know someone that might be a good fit for you. So either way, hopefully it can be a pretty fruitful conversation.
Awesome. Ryan's last name is Toomey and it's spelled Twomey. Thank you very much, Ryan. And if there's anything that you guys would like to talk to me about, have a free consultation, little open your eyes to your business and talk about how you make some money, then get hold of Ryan to invest it. Click the little show link below, set up a time to meet with me. Ryan, thank you very much for your time today. It's
I
been a
appreciate you having me
pleasure.
on.
I love real estate. I think I told everybody that before, but anyway, y'all have a good day and I'll see you next week. Bye bye.